Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Good evening, everyone. It is 5:23 p.m. Eastern Time, March 14th, in case you didn't know that. Anyway, just looking at the markets like we usually do. Wasn't anything really dramatic, except for you had on the, let me see, get this thing out of the way here a little bit. On the short-term charts here, on the Qs and the SPY and everything, it's about the same. See, it wasn't really in a clarity, but see, that's what I'm saying. Like I've said before, that it doesn't have to be above the signal line for you to have an advance. You see, but it's better. See, like comparing the 30-minute hourly chart, stuff like that. The hourly chart is almost above the signal line. So how about the 2-hour chart? Yeah, that's when you just snoop around and look. See, 2-hour chart, it's above the signal line. So that's what makes it more powerful. You see what I'm saying? So this is an up move. So keep in mind that even though it has a really nice pattern, the up moves on the options, the call options, will be limited because the volatility premium is extracted as volatility comes down. So watch this. Curious phenomenon. And so don't anybody go asking me, why didn't the options move 10,000%? Because I'm going to tell you again, like I've told you before. Just pay attention. You know what I mean? You think, oh man, there'd just be some dramatic gains. And well, where are they? Here is this morning, and here is yesterday when they had a divergence. Excuse me? About 40 cents for the out of the money calls. I'm getting a no on that just off the top of my head. And it went to a high of $1.88. So that's at the most only a little over 4 times your money. So that's not anything I'd have any interest in at all. So let's try a 481 or something like that. See, 81. Here's like 481. And they still want 22 cents at the lows. Here it came back down and retested the lows, even though the divergence was over here, but they retested the price lows. That's a good thing. So 22 cents up to 91 cents. Still the same thing. It's only a little over 4 times your money. For 22 cents to 88 cents is 4 times your money. So even you're going really far out of the money, you're really chancing it then, you see? That's what happens when the volatility is extracted from the premiums. You don't get a good return on your money, even though you would think that you would. I mean, it's something. 4 or 5 times your money. It's something, but it's not anything that would interest me, because if I look at the options that are a good ways out of the money, like these are, and they still want more than 10 cents, there's something wrong with that. So I just forego it. Just forget it. See, now the Russell 2000, see if the same thing is true. See if it has a 2-hour. See, all have a 2-hour chart. It's, well, we're in the mix. So they all had the 2-hour chart. See how time plays with you, and a little bit of market action, you know, and then it moves up from the 30-minute chart to an hourly chart to a 2-hour chart to a 4-hour chart to a daily chart. Maybe see, but they all had essentially the same pattern. So well, let's see, take a look at the S&P 500. So same thing is true on the pattern. So I'll show you, see the detail. Very nice pattern. So you'd be in the right to think that you would be making good profits. But let's see, I'm going to say 562. So no. See, 562. Even yesterday at the close were 29 cents. You got to be kidding me, right? And they only moved to a high of $1.60 something. So that is about 5 times your money, maybe 6, maybe at the most. See, not a good thing. See, now if I try to squeeze it, I go to 565 call. This morning, let's see here. I'm looking for something that is showing me a good pattern. Let's see. I don't see it here. You see what I mean? Like here. So no, I don't see what we're looking for. See, like 10 cents. Okay. Okay. And it moved up to 49 cents. So it's about the same return, but it quickly drops off. See how it does? If it doesn't continue to have that acceleration in price from here on this about 1150. So that was the highest that it made it for the day. And it was less than 5 times your money. So that's pretty sketchy, or right at 5 times your money. So they're really sketchy. Not worth the risk. 565 calls on the SPY. See, so even though it closed yesterday, I say around 550, that would put those 565s $15 out of the money. And they still wanted a dime. That's a little too iffy for it to move $15. Because if it did move $15, it would just put you at the money. See, the options would still expire worthless at zero. You see what I mean? So that's not a good buy there. Not at all. Okay, so here again, we'll look at the Russell 2000 and see what it did. And keep in mind that oftentimes the options on the Russell will outperform the other ones. Call. Okay, and 20, let's see, I'll put in a 203 just in case. But okay, they were 8 cents. See, again, like I've explained, that oftentimes when even the stock gaps down, the options prices, the put options, do not gap up. So this is this morning at 10:20, and they were 8 cents. or 7 cents, about 8 cents, I can give it. And then those move to 54 cents. So is that a better return than 4 or 5 times your money that we saw on both the Qs and the SPY? Is from 8 cents to 54 cents. See, 8 times 7 is 56, right? So this is a better return. And also it was done by 1140, but a better return than the other two. Still not close to what you think they would probably be capable of doing because volatility dropped so much, because that premium was extracted from the options. See? So just keep that in mind. We want to see, like yesterday, see this nice pattern here led to a market sell-off. So, but led to a market sell-off in the form that, see, like here, that could form an upside divergence. See, so one thing happens and it causes another thing to happen. So you have to keep paying attention to each time frame when the market is in the cycle of regrouping kind of thing. So find out what it's all about. So just keep in mind that the options prices don't move nearly as much as you would expect them to, even though you had a good pattern. So the Russell 2000 of the 3 major indexes was the best. So today we can even look at the DIA and see what it does and see if it had same thing. 2-hour chart pattern. Does not have a 2-hour chart pattern, so I wouldn't even mess with it. The volatility index, UVXY 25 0314 put 25. See, the 25 puts at 1:30 yesterday were a dime, and they went to $1.28 today. So overall, just not as heavy volume activity on the volatility as you see on the major indexes, but overall a better return. So from 10 cents yesterday, or really basically the same thing. It started out about 10 or 12 cents this morning, and went to $1.38. So it's well over 1,000%. Just keep in mind, volatility is only a good trade when, like today, it has expiration. And that is only once every week. Maybe that'll change too sometime in the up and coming future, but for now, it's just once a week. Okay, a little bit of information. Hope that helps. And I'll talk to everybody later. Have a good night and a good weekend.